Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's keep up with our euro analysis. So yesterday we have a really long discussion on the cross market analysis when we taking a look at the dollar index and the gold to euro chart, where we see some hints on the possible future performance, at least as it is suggested by current technical picture. So of course everything could happen because currently the political factors, external factors are really strong and barely could be predicted. So it could change the situation just in a blink of an eye. But in general, as it stands right now, it seems that something is changing really on the forex market in particular, because the fundamental balance that we discussed in the beginning of the year gradually starts to change. So our initial bet was in favor of the United States dollar because it was better performance in the economy, it was better policy of the Fed Reserve. But in the recent few months, the economy can't hold the same pace, and we could see really deteriorating statistics is coming. So it's touching every every sphere of the economy life. So it's retail sales, the ISM index, production, consumption, and everything. So all data is becoming a bit worse than previously. So it also is reflected in the Fed policy, so it has become more dovish. Recently we discussed in the weekly report that the Fed has changed the policy in relation to its balance sheet. So if previously it sell the assets out from the balance, trying the liquidity, now has turned the trend in opposite direction. Now it starts buying assets back, and at the same pace, 60 billions per month. So this is actually equals the previously standard quantitative easing program. So this is also the dovish step, and investors becomes worried on the perspective because the Fed hardly will be do it just occasionally. So it means that something they see, and they're trying to act as early as possible to prevent any negative consequences of this situation. And all this stuff makes an impact on the forex market as well. So in a short-term perspective, our suggestion seems to be correct. Indeed, market starting some gradual retracement here. OP has been reached. Market shows just minor pullback. So nothing significant has happened yet on the daily. I think that retracement probably should be a bit deeper. By the technical reasons, this rally actually first upside reversal swing after the long-lasting downside trend, and usually when the market shows the first reversal swing, retracement is deep. So it should be somewhere at least the 30%, 50%, I suppose. It's really probable. So currently it seems that we stand just in the beginning of this action. The one detail that is also worth it to mention right now, as we're coming closer to the end of the October, we could get really very important technical signal on the high time frame charts. So if we'll take a look at the dollar index as well and take a look at the monthly chart, you will see that if market will close approximately at the same level where it stands right now, take a look, we will get monthly reversal candle. So take a look, market creates the new top and right now stands below the lows of the previous month. That is reversal type of action, and that could be really important because some continuation down it could trigger. But taking into consideration the things that we discussed yesterday, that this could be just the rest of the previous bullish momentum that's ending right now, that could lead to the stronger consequences, and that the appearing of the bearish reversal candle could be not just occasional action. The same we could get on the euro currency. On the monthly chart, this also currently it stands like the reversal. But major tricky moment stands around the Fed meeting. The Fed meeting will take place at the 30th of October, and that's right at the end of the month. It will be really interesting, fascinating moment where the month will close, at what price, what action will be triggered by the Fed meeting. So that's important. Also, it's very interesting what will happen on the 31 on October, 31st of October, because this will be the deadline for the Brexit. So although we know that it's now in negotiation stands on the postponing on the January, but who knows how this negotiation will go and what result will be. That's some moments that really could trigger significant volatility on your currency by the end of the month. And if even market currently, right now, showing deep retracement and will appear somewhere below the previous month's extreme point, everything could change right by the end of the month. So it will be really tough months for the Forex, especially for Euro. We will see what will happen. Meantime, on the 4-hour time frame chart, you can see the market is drifting lower. We've got actually no pattern, so double ripple pattern also has not been formed as market just continues downward action. You can see that it keeps some harmonic retracement, and now is coming to final point of this harmonic retracement. So first level that we have specified yesterday is the target. So this is 11/6 fib level, weekly pivot point. In the middle of this downward action, you can see the market has formed a reversal candle as well, bearish reversal candle. It's interesting that on the Great British Pound we also have the same reversal candle on the 4-hour time frame chart. And by this candle we have actually two different extensions to the downside. So the first extension is the small initial one. We talked about it yesterday. So yesterday we said if you're a scalp trader, you could try to trade daily, keep it, sell trade by the chart Napoli. In this case, you need to take some target of this ABCD pattern. So currently you can see that OP has been hit. That's the first target of this pattern. Next one stands at XOP, is 110.90 approximately. But as we have here deeper retracement and reversal action, we could also use this ABCD pattern that has 10.97 target 111. So it means that market, to reach the first target cluster, it could drop slightly below the fib level. So it could be not 11/6, but it could be 111, 190 area to reach the targets that we have on the hourly chart. If you have the short position currently, for profit-taking purposes, it's better to use as a point, not the extreme point, but this top that stands slightly lower, because right from this point, downward action has started. And if you will recalculate the targets, you will see that OP has been hit right there by this drop, and XOP will coincide with the same target of this larger ABCD pattern. That's for the target taking for profit taking objective. So for those of you who take and have right now short position. But in general, we will be watching for reaching of this 111, 110.90 area. This will be first destination point, and then maybe some response here will happen. Maybe some retracement will start. We will see. But currently, we are dealing with this retracement and see what reaction the market will follow. Definitely, this not the thrusting action, not some reversal. This is definitely the retracement features. So the action is very choppy, gradual. So that's typical for retracement action. So that's our view on euro currency right now.